Good evening, everyone. This is KF here, and I want to review this past trading week. We had a very nice $4,000 week. I want to talk about some of the strategies and things that led us to being successful. Here's our review here. Monday was our biggest day of the week, and Friday, I don't want to say we ended weak. It was a green day nonetheless, but definitely didn't compare with some of our other days. And we have some really important things and takeaways that we need to learn from this past week of trading to take into next week to make sure that we are successful. First thing I want to talk about is how important it is to have a trade plan. Okay, this is a watch list play. Within our chat room, we send out watch lists every evening, highlighting trades that we need to be ready to take the next day. Well, this was one of our watch lists. We sent this out Thursday afternoon. IRBT, this is iRobot. They released earnings Thursday afternoon, and I created this trade plan highlighting really very precise of our entries that we wanted to look for this on the following day. Okay, so if you take a look at this trade plan here, we're looking for the dip buy between $98 and $99. Now, if you look at this chart, you might ask yourself, why would I want to dip buy this between $98 and $99? Let me pull out my pen here so I can be a little more specific here. So this is right here. This is the $99 level of resistance. You'll notice that after they released earnings, we got the really big spike here, and then it bounced off this $99 level a couple times, and it ended up finding support here before trickling back upwards in after hours. And then even in pre-market, it kind of bounced off this $99 of support. So why in the world would I, the day before, say that I want to buy this if it cracks under $99? Right? Look at this trade plan again here. I mentioned down here, dip buy area for me is conservatively between $98 and $99. And then I also said that this may set up for a good breakout as well, and this did end up serving for a very good breakout as well. We ended up trading it the next day for big profits on a breakout too. But the reason why I did want to trade this once it cracked support and buy it to go long, typically people will short that when a stock cracks critical level support. But why did I decide to long this? Well, this is mainly because of recent market patterns and recent market action. Okay, we've had lots of what we call fake outs. All right, in this case, a crack on IRBT under $99, and then you'll notice here, this is the actual day, it bounced to 98 and shot right back up. We call this a fake out breakdown. Right now, this under $99, this stock should have bled and dropped because it cracked critical level of support. However, it was a fake out breakdown. Now, how did I know I was going to do that? Well, for starters, you never know 100% anything to be the case, right? All we can do is take what's been happening recently in the markets and use that to our advantage. And that's exactly what I did here. The market has been providing lots of fake out breakdowns and even fake out breakouts. So instead of shorting on the crack under 99, I actually wanted to dip buy because I anticipated that it would be a fake out breakout and bounce to the upside. So this was my alert. You'll notice I'm Mountain Standard Time, so 7:11 a.m. That's about 20 minutes before market open. I did alert this. I said, the watch this play we sent out is very much alive and well. We're going to be dip buying this between 98 and 99. And then just a few minutes later, I narrowed it down. I said I officially want to put my buy in at 98.51. And look how well this played out. Let's zoom in a little bit closer here. This played out really, really well. But notice that it only dipped under $99 for 3 minutes. 4 minutes was it under the $99 range. Okay, if you were not prepared the night before for this buy, there's no way you would have possibly caught this. All right, now I ended up selling this at the $100.84 level, and it continued all the way up to 104. Right? Okay, so I left plenty of money on the table. Had I sold at high, of course, no, you can't expect to sell at high, but there was potential there for a 6.5% gain. Instead, I took about 2 to 3% gain, which I'm still very pleased with. I would never be upset about leaving money on the table in this case. I'm very, very pleased. I mean, I was in this trade for 4 minutes. I made, I think, close to $300 in just 4 minutes or so. So I was very, very pleased with this trade. I traded it kind of small. You'll notice in the watch list, I did say conservatively. Let me go back and highlight that. You'll notice right here, I say conservatively between $98 and $99. That means that I'm going to buy smaller sizing. So I only bought 100 shares of this stock. So that's why it was about a $300 trade for me. But still a nice winner nonetheless. And you'll see it end up continuing. There was lots of different ways to profit on it. I could have rinsed and repeated it here and whatnot, but rinse and repeats have also been really, really good in our markets. What I mean by rinse and repeat is you basically repeat your same trade plan. So the stock falls back down, you rebuy at the exact same level and look to sell at the same level. It's called rinse and repeat. I won't get too much into detail about those right now, but those have been really good. So anyways, the main takeaway here from this is there's no way you could have been prepared for this dip buy unless you were prepared the night before, unless you received our watch list the night before. and had these plans, unless you knew that markets have been causing fake out breakouts recently and you were prepared for this action. Okay, so next week fake out breakdowns. Sorry, this is a fake out breakdown. I mean, they may not be in play, right? And a week from now, if we have this exact same setup, we may end up shorting it under 99 instead of dip buying it, right? That's why it's so important to have a team, to have people constantly watching what's working in the markets and what is not working, being agile, being flexible. So that was an awesome trade for us. We traded IRBT multiple times. I ended up swinging it later this day, and I think I got back in for rinse and repeat about $98 and ended up selling it over $100 the next day. It ended up running to 110. And you'll notice in my watch list play, I mentioned that, I can't remember if I think I said, let's see. I don't know if I was very specific about a price. I'm usually very specific about the price target I'm looking for, but it looks like I wasn't in this case. But anyways, it ended up hitting almost $110 the next day, and it provided a lot of good trading opportunities for us. Okay, next up I want to talk about what I mean by fake out breakout a little bit more. Okay, this is COTY. We actually traded this twice, and I was profitable on it the first time, and then I lost on it the second time. So if you take a look at this chart here, this is what we call a bull flag. Notice how it's kind of like a triangle, but it's pointed upwards. Okay, imagine holding like a pennant of some sort. That's a flag, right? It looks like a flag. You'll stick it in the ground. This is what we call a bull flag because it's upward pointing. Also, it's at the upper range of the overall stocks trading range. But look what it does here. I mean, the $9 breakout was obviously a very clear level of resistance. Notice it got denied right here. Got denied again, pulled back, and it finally broke through and had that really nice pop. Well, the first time we traded this, I got in at about 902 and sold at like 909. I traded it very quickly for 1,000 shares. It was only like an $80 trade, super small, right? But the reason why I sold it so quickly, usually I'd be patient for it to continue upwards. The reason why I sold it so quickly though is because we did not get the follow through on the level twos and the time and sells that convinced me that this would continue upwards. The momentum was not there, and so I sold it really early and got out quickly. But this is what we call a fake out breakout. Yes, it pops the resistance level initially, but it totally fakes out and comes back down, and it ends up being pretty weak. Now, of course, later on it follows through. Yes, later on it absolutely follows through. But in terms of the initial breakout, total fake out. Okay, and this is what I'm referring to when I talk about this IRBT trade under $99, right? Sorry to go back yet again, but this is exactly what I'm referring to. That I anticipate that would be a fake out breakdown. Okay, sorry, I might be mixing these terms up. But here on COTY, this is an example of a fake out breakout right here. Okay, but I did go long this one. I sold it really quick for profits. I ended up getting back in on this pullback here for a rinse and repeat to see if it quickly reclaimed. And I stopped out. I think I stopped out here in this candle, just playing it really safe. But I ended up getting really nice follow through. This is a bull flag breakout. You typically do want to look out for these, but just be aware that we are having lots of fake outs recently. Now, one thing that's super important and stuck out a ton to me this last week was trend lines. Okay, notice this trend line, and notice what happens as soon as this trend line breaks. Total washout, total spill. We traded so many trend line breakdowns. Okay, so this is a trend line holding support, pushing the stock up, but as soon as it breaks that trend line, we shorted this. This is Netflix. We shorted this stock. I think I shorted it for maybe $1.50 to $2 a share. Nothing crazy huge. Ended up falling from $3.57 to $3.54, about $3. But you need to be looking for these trend line breaks. Okay, whether it's a trend line that breaks down and you short, or a trend line that breaks up and you get long on. Okay, there's multiple options there. Those ended up being very big plays for us. Okay, next I want to talk about here is. This is another bull flag breakout. Another one we ended up taking. This was PZZA, and it was an earnings winner. And pretty simple, nothing too crazy here. We got in at the 42.75 level, sold for about 50 cents a share. I mean, it's nothing crazy, right? But these small wins are what added up slowly but surely and led to me having a $4,000 week in profits. These very similar setups. So you will notice that this one broke over the 42.75 previous high of day here. It was a bull flag. This one broke over and got much better follow through. But this is had the stock have broken this trend to the downside, had it have come down here right now, I would have wanted to short this on the break of this trend line, just like we did with Netflix earlier. Okay, so this is just a real brief. Just want to talk about a couple plays we took here for this last week. And real quick before we end this up, I just want to mention that we are helping people out with their taxes. We've hired a nationally renowned CPA, and he's doing people's taxes for significantly less than they usually than they usually will be charged. And he's really amazing. He's amazing. So head to calftax.com and he'll, you can get a totally free quote, no pressure or anything like that. Get a free quote. He'll help you out. So some takeaways here from this video and from this week of trading is that the less certain a setup, the smaller position size we want to take. For example, on that IRBT trade, I only took 100 shares because it was a little bit riskier. I was confident that it would just be a fake out breakdown, but I did take smaller sizing because it was a little bit riskier. And it was so quick. There was so much volatility to begin the morning off. So if you're ever in a setup and you're just not sure about it, just take a smaller size, give it a little bit more room, right? That's kind of the catch. Additionally, trendline breaks, look to short the breakdown, long the breakout. And then most importantly, the takeaway would be create trade plans and respect your trade plans, okay? Like I mentioned with the IRBT, had I not made that trade plan, there's no way I ever would have gotten in that stock, and no way I ever would have been able to make that profitable trade if I didn't prepare the night before and scan and look for the right setups. Next is just keep it simple. We're big fans of keeping it simple, okay? People love to overcomplicate things with having 100 different studies and lines all over their charts and crisscross that and this. Just keep it simple, I promise you. Don't feel like you have to have 75 different studies on your chart to be a successful trader. You really don't. Trade the price action, keep it simple, look for what's working, and then rinse and repeat what is working. Lastly, I want to talk about trading the first hour of the day. This is huge. I've been focusing on trading the first hour of the day really, really strongly. If you look at my profits of $4,000 this week, that's almost only trading the first hour of the day. So that's about $4,000 and really only 5 hours of trading. It's not a bad, hourly rate, about $800 or so an hour. And anytime I took a trade after that first hour, actually I would say I was probably about 50-50 on trades after the first hour, but I didn't take many of them. I took very few of them. So just please focus on trading the first hour of the day. I promise you will not regret it. So that sums up this video lesson. We will be making more of these. So please just stay subscribed and we're just going to do what we can, put as much free content out there for you guys to benefit from. As always, you can start a free 1-week trial with us at kafinvesting.com. You're more than welcome. Or email me at kaf@kafinvesting.com as well.